their ability to scale, that's a huge part of their advantage. And of course, not just here, but especially in China and around the world.
Are there particular technical levels you're watching for Tesla's stock to see like if the worst of the pain is already passed?
Yeah, I think, look, in my mind, from a sentiment perspective, it has just been as negative as I've seen it in a number of years. I think as we get past next week, the shareholder meeting, you start to see stabilization in 2Q and 3Q, and then I think investors start to look into next year. But again, betting against Musk, betting against Tesla, that's been the wrong bet, despite, I think many that have piled on. And I think, yet again, this will be proven to be more of a golden opportunity to own Tesla rather than the start of a negative decline.
All right, Dan, thanks so much for joining us. As always, appreciate it. Dan Ives, he's a managing director, senior equity analyst at Wedbush Securities, joining us here, talking all things technology. That's one of the great things about chatting with Dan. You can kind of go all over the tech map.
That's true.
And get a conviction comments is kind of the way I phrase it.
The Wall Street's best dressed, according to the New York Post. But Paul, we call you the fashion police here, though.
Yeah,
at Bloomberg.
Totally.
Especially summer Fridays.
So if you saw Dan in the Bloomberg headquarters, would you stop him?
Do you remember last summer? I think somebody came in with sandals. It was socks and sandals.
Flip-flops does not work in the office.
Paul was not here for it.
Can we all agree upon no sandals or flip-flops?
I'm not going to agree on that.
I mean, come on.
I'd like to come barefoot.
Yeah, well, Dan, you're right. He was written up in the New York Post for his wonderful wardrobe that he wears.
Colorful.
All around, plus, it's all around the world because the guy's always on
you got to learn
here.
about where he buys all of these outfits.
Exactly. Looking at Bitcoin here, I'm going to call this out from Matt Miller because we are right on the precipice of getting back to 70,000, 69,968 on Bitcoin. I have no idea what to make of that other than a little bit of a risk on in the marketplace.
There's also volatility halts that are hitting numerous NYSE listed stocks in error right now. So we'll have more updates on that.
Yeah, so the meme stock thing is back. I don't know what to make of that either. I mean, Mr. Gartman of the Gartman letter this morning said, hey, that's just another example of some frothiness in this market. We'll have to see. S&P up 0.25%. This is good.
events, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News. With this Bloomberg Business Flash, the major stock averages, they are mixed right now. We have that apparent glitch at the operator of the New York Stock Exchange, triggering volatility trading halts in about a dozen companies, including Chipotle Mexican Grill. And this gives you an indication what a good reporter is. Not only she's anchoring, but she's on the phone with her sources,
yes,
telling her exactly what the problem. Did you learn anything?
Yes, well, actually, I was just talking to a trader down at the New York Stock Exchange, so he's seeing that it's affecting at least around a dozen stocks that they were trying to trade, but it's not more broadly. It's more of a handful of shares that are being affected right now. But again, we're still waiting on the exchange to comment.
All right, so 5 of the 11 major industry groups in the S&P 500 higher right now. Healthcare and information technology in the lead. Energy, the biggest drag. And in terms of index points, Autodesk, that is among the individual leaders. They're up over 8%. The software company saying no financial statements are going to be restated or adjusted following results of an investigation by the board's audit committee. Then you have JetBlue Airways. Those shares right now up close to 4%. Sales performance for this quarter is going to be somewhat better than expected. And then at the top of the hour, we have the EcoData Manufacturing Index shrinking in May, the factory index, the Institute for Supply Management's manufacturing gauge falling to the weakest in 3 months. 2-year yield as a result, 4 basis points lower at 482. The 10-year, 7 basis points lower. That's at 442. S&P 500, 11 points higher. That's up 0.2% at 5288. The Dow Jones Industrial Average, 30 points lower. The Nasdaq 100, 96 points lower. Lower yields helping out the tech stocks. That is up right now. The index up 0.5%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Jess and Paul.
All right, John Tucker, thank you so much. We appreciate that. Jess Menton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on that YouTube.
That's
thing.
right.
So
Tune in.
Yes, exactly. The video thing
Follow
going
us
here on YouTube.com and search Bloomberg Podcast here at SPX. Up about 10, 11% this year. SPW, the equal weighted index, up about 4.5% here. So still some of those big names kind of driving it here a little bit.
Also, the S&P 500 up 23 of the past 31 weeks. So since the October low, if you want to go back, that was around October 27th when the S&P made that low, up about coming into today's trading 28% since that.
Not bad. Let's see what the pros are doing here. Margie Patel is certainly a pro. She's been doing this for some time, has some great perspective. Margie Patel is the senior portfolio manager at Allspring Global Investments, joining us from Boston via Zoom. Margie, when you talk to your clients here, what do you tell them about these markets? Should they be focusing on the big tech names? Should they be broadening it out to some other sectors? What kind of discussions are you having with your clients these days?
Well, we still think the tech sector is one of the leading sectors because they still have secular growth and cyclical growth behind. And so we don't think the sector is really overvalued, considering the growth that they should have over the next 1, 2, 3 years. We think they still are pretty fairly priced, and it's still going to be one of the fastest growing sectors. So it's still a market that's selective. We see opportunities in some of the industrials, particularly those companies that are linked to some of the mega trends, such as the move to the cloud and data centers and reindustrialization, reshoring, things like that. But a more selective market, I think, is going to continue.
Well, Margie, as the calendar just flipped to June, obviously there's different ways to cut kind of seasonality, different factors. I know people like to talk about the June swoon or even sell it May and go away, but obviously if you look over the last decade, really hasn't worked as well. If you use the SEAG Go function in the terminal, you can see how the S&P 500 has only been down twice in June over the last decade. So in 2022 during that bear market, and then in 2015, obviously that correlated with what was going on with some manufacturing slowdowns in China, and then obviously those highly indebted European countries, that was worries of default there. But in election year periods, typically the summer can actually be a stronger period, but that usually comes when there's more clarity as far as who the winner would be. Very different kind of setup that we have this time around. But I'm wondering over the next few months, where do you see stocks headed from here as far as when Paul and I were just talking about the rally that the S&P has been on since that October low?
Yeah. Well, I don't think you can really look at the history books to give you comfort for how this year is going to work out. I think we have just a narrow window for the Fed to act if they're going to lower rates before they'll want to be quiet before the election. But typically, election years are strong years. They may waffle around mid-year, like right now, but no matter who wins, they seem to have a strong finish to the end of the year. So we think that we may see a little bit of back and forth here, uncertainty over Fed policy, over will the economy continue to show any weakening trends, and then the market, I think, will look to the end of the year and be pretty optimistic again. So we're looking for a strong finish.
Margie, how much is that strong finish predicated upon earnings? I'd love to get your thoughts on kind of what we're seeing in the earnings from corporate America this year and what you expect for the remainder of the year. Can that be a driver of stocks?
Well, I think it'll be more of the same. Companies, just as last year, they're more or less continuing to surprise with better earnings. Profit margins are being maintained. I think that's a little benefit from this little above average inflation that's helping companies. And really, if you look at the first quarter, we had growth in the GDP of 1.3. S&P revenues are up, I think, 4%. Profits are up 10%. So I think it shows you that the Standard & Poor's or NASDAQ companies are not necessarily reflective of what you see for the, say, the GDP numbers, and it shows companies can still grind out profits that are way above the GDP growth. So we think that's what we're going to see is, more something close to that 10% earnings growth for the year, for the rest of the year.
What are some of your top questions that you're getting from clients right now?
Well, I think everyone is concerned about interest rates. Will the Fed act or won't they act, and what influence will that have on the economy? I personally don't think it's going to have very much of a material impact either way. A quarter point, I think, won't really change the direction of the economy. It's pretty strong. And people are, of course, very concerned about the deficit, where the money will come from. Will we need it from foreign investors? Will that cause treasury rates to go up as the government needs to finance a very large deficit? So I think those are the things that people are focusing on, really more macro rather than any individual sector.
Margie, for no particular reason, this studio of radio professionals feels like they're experts on the electrical grid here. And a lot of folks feel like, maybe utilities are a way to play AI and things like that. How do you think about the grid, the power grid, and how it plays into this economy?
Well, I think it's funny. It's one of the most boring parts of the market has become one of the most hot and trendy parts. I think the utility companies, I think, are a rather limited way to play the growth in power consumption that we expect we'll see from economic growth and, of course, from the data centers. And I think a more interesting way to take advantage of those trends really is which companies will participate in the growth of building the infrastructure, hardening the grid, things like that. Again, so that says more companies in the industrial space rather than the utility space. Although you could make a case for some of the independent power companies that have excess power that will be able to help balance the needs between various regions and between, say, unreliable or variable green sources versus base loads such as coal or gas or nuclear.
When you're looking at utilities companies, typically people think of them as obviously the consistent dividends that they pay and low volatility, but also in addition to the AI sort of play with this, could this be basically investors seeing that peak in rates that's happening when you're seeing a particular corner like this that has been rallying since its April 19th lows that we saw for that particular sub-industry group?
Well, really, when you look at the utilities, when you look at their price earnings ratio and you look at their dividend yields, on that basis, they aren't really attractive, as attractive, say, as they've been historically compared to treasury rates. When you have a 10-year treasury, say 4.5, 4.75, something like that, most dividends on utilities are a lot lower. So they really aren't as competitive as, say, as they used to be some years ago, where there would be more of an interest rate play by buying the utilities to get the very high dividend yields. They just really, I don't think can be as competitive just as intermediate treasuries.
Push that blue button there. Margie, thanks so much for joining us here. Margie Patel, Senior Portfolio Manager, Allspring Global Investments, joining us from Boston via Zoom. I want to go back to the story about this New York Stock Exchange.
That's right.
Why is my stock exchange having problems with reporting like prices? Isn't that kind of what they're supposed to be doing here? Is this
That's right.
So do we know anything about how many stocks it's impacting?
So right now, when I was just talking to a trader at the New York Stock Exchange, for him, it was affecting about a dozen different stocks. So more confined to just a handful of names.
Gotcha.
And what we were mentioning last week, we saw this early Thursday morning whenever we did see the S&P 500 and the NASDAQ 100 not ticking. It got stuck at 10:41 a.m. that morning. Didn't tick for a little bit over an hour. But in that particular instance, individual stocks were still being traded. Right now, it looks like with this particular glitch, there's about a dozen names so far that have been impacted.
And one of the names was Chipotle. I mean, talk about a key name for me. I'm a huge Chipotle fan. I don't know if that stock's not trading. We got a problem here.
Chipotle and Peloton are your two big.
Yes,
I guess that makes sense. You eat the burritos and then you need to burn off the calories.
Then you hop on the Peloton. So we'll see.
Right.
But, right now, we'll keep an eye on that. And again, we've got a team here at Bloomberg focusing on this story as well. So again, we'll keep an eye on the New York Stock Exchange and some of the technical glitches, however limited they may be. We'll keep up to date on that. Looking at the broader markets here, the S&P 500, it is up 0.2%. The Dow's off about 0.1%. The Nasdaq's up 0.6%. I'm keeping an eye on oil here. It's off 3% today, 3.2%. We're down to $74.50 on WTI crude oil. $3.35 per gallon at the BP on Route 35 in Wall Township yesterday. So it is coming down, and that is good news for summer drivers here. With our news in New York City,
thank you very much, Paul. Jess, John, Hunter Biden is at the courthouse in Delaware. He is about to be the first child of a sitting president to go on trial days after Donald Trump became the first former president convicted of felonies. Bloomberg's Laura Davison says it presents a political opportunity for Trump.
What he likes to do and kind of how he strategizes, he will always deflect. If he's asked about his conviction, he can just point and say, well, what about what Hunter Biden is doing? And he has multiple times made false statements about Hunter Biden, his and his father's involvement in his addiction and his money issues. But this is injects this new paradigm into the election where it's all about courts. Can we trust them? And sort of what is the future of the judicial system?
Bloomberg's Laura Davison reports President Biden is likely to monitor the trial primarily as a concerned parent. An ABC News Ipsos poll finds that half of Americans think Donald Trump's guilty verdict on all 34 counts in his hush money trial was correct. Almost as many, 49%, think he should end his 2024 presidential campaign over the result. But that's not what these Trump supporters believe. The rally was held in support of the former president in West Palm Beach, slamming the New York verdicts last week.
I think it was a kangaroo court.
I'm really at peace because I'm not angry. That's why I'm here.
Biden can't win without stopping him.
Dozens of cars flew flags and honked their horns in support of Trump. Former government health official Dr. Anthony Fauci is about to publicly testify on Capitol Hill today. For the first time in 2 years, Fauci is expected to face questions about social distancing, masking, and remote schooling, and whether guidance on those issues approved by the CDC director was based on science. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And let's get you updated on this apparent glitch with trading at the New York Stock Exchange. A few shares have been affected by this. And let's go right to the Class A shares of Berkshire Hathaway stock. They were halted by the New York Stock Exchange after the prices dropped more than 99%. Again, this is the Class A shares of Berkshire. The trading was halted around 9:50 this morning. The price 185.10. That's down 99.97% for the day. The Class B shares, they'd fallen about 1% right now to 410.36, and they are still trading. Jess Menton, you've been on the phone with a number of traders at the NYSE, and what have you been able to learn about this? We're calling it the apparent technical glitch, right?
That's right. So looking at this morning, there's about close to around a dozen stocks at least that had triggered this limit up, limit down. One example I want to point out, if you look at Barrick Gold, GOLD is the ticker symbol on this. That stock right now, if you look at this, it's trading around 25 cents. It had dropped almost 100%, and it had been trading around actually $17 through the close on Friday. So this is another example of one of those stocks that did trigger those bans there. So right now it is limited to a handful of stocks, but we are seeing different volatility hitting those numerous NYSE listed stocks in another area. So in addition to Chipotle as well as Berkshire, Barrick Gold is another example.
Okay, it's like deja vu all over again from last week when we had those technical glitches. Let's do the overall indexes right now. S&P 500 up 7 points. That's up 0.1%. We're at 52.85 in the index. The Dow Jones Industrial Average 104 points lower. That is down 0.3%. The Nasdaq 100 right now is up 87 points. That's up 0.5%. And those yields after the ISM manufacturing data at the top of the hour, 2-year, 5 basis points lower. That's at 481. The 10-year right now, 8 basis points lower. That's at 441. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Jess and Paul.
All right, John Tucker, thank you so much. We appreciate that. Jess Menton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, streaming live on the internet, John Tucker. That's the internet.
I've heard of that. I've heard of that.
YouTube.com, and you can search Bloomberg podcast, and that's where you'll find us. Peter Vosser joins us. He's the chairman of ABB, a publicly traded company. ABBN is the ticker. They are located in Europe and in Zurich. Our good friends over in Switzerland. My daughter's in Zurich today.
Oh, really?
Why she's in Zurich on holiday, I have no idea, but that's where she is today. I got something. It's a beautiful city. Peter, talk to us about ABB. What are the challenges you guys are facing here as you think about to electrify, automate, hard to decarbonize industries? Where's your focus of your company these days?
Well, thanks for having me. It's the energy transition, which is not only the hard-to-abate sectors, it's in general the move from a more fossil-driven energy system into electric energy system. And there we obviously contribute with our products and systems, which gives us energy savings between 20 and 40 or even 50%. So that's one angle. The other one is all linked to new technologies around automation and robotics, because we are a world-leading company in both areas. And that has to do with the reshoring, bringing things closer home again, where the markets are, but also in some countries dealing with the demographics, because we have less and less people working in the working age, and therefore robotics and the automation becomes very important. And the last one is AI, which will revolutionize, obviously, all what's related to automation in the future.
Well, talk to us more about what you think is the best way to try to scale manufacturing when it comes to the EV charging space.
I think what we really need on the e-mobility side, let me put it this way, is really work on two fronts. One is the technical side on the charging side, but the other one is also on the user friendliness side, so that they become actually more reliable, they are much more modern. On the manufacturing side, I think we have had clearly in some countries and regions, there was some scarcity of manufacturing capacity, which I think have been solved. Was not an issue for ABB in that sense, but it's the product evolution which is very key. Now, on the other side, I think one should not forget that the whole network of electrification needs to be up to speed. You cannot just actually consume much more energy. You also need to build transmission lines that the power actually comes in where we have got, let's say, the chargers installed, either for private passenger cars or for buses, ships, trains, whatever you want to call it. So I think we need much more infrastructure investments on the one side in really to actually get the EV charging and the passenger cars based on electrification much more developed in the future.
Peter, who are some of your bigger customers that you're working with these days?
We are here in the United States, so we have all kind of manufacturing companies in that sense. But on the industrial side, any company you can think of, they are in manufacturing space, for example, they use our electrification products, they use our automation products. So you have all the industrial companies, and that's where we make the difference. On the other side, utilities are very key. As I just said, they need to make sure we have enough supply.
And I know I'm just looking at our PGEO function where I can see where your revenue comes by geography. You're everywhere. A third in Europe, a third in, you're truly a global company. So do you see certain parts of the world that are more in front of, kind of making the transition than some others?
Yeah, I think I would say that Europe has started this rather early, this with the new Green Deal in Europe, but also moving into a very different energy systems. Paid some price with the wars in Russia, so energy prices have gone up and some rethinking has taken place. I think here in the US, you quite clearly see the demand is there in all industries, now supported by the various acts you have. Here, either the Inflation Act or then also the Industrial Act, and that is driving investments now. It's much earlier days than in Europe, for example. Asia is a little bit a mixed bag, I have to say. So you see some countries at the leading edge, like smaller countries like Singapore. In China, which is our second biggest market after the US, you see actually a lot of efforts now being put in place to change the electric system in China. A lot of EV cars are coming in, and you can see that those really are now generating the growth in China, whilst it is subdued compared to the US at this stage. So indeed, we are operating across the world in more than 100 countries. We get good insights. At the moment, the driving forces are really the US and Europe, with, let's say, Asia, apart from India, are lacking somewhat.
So where else do you go to expand from here when you already are in so many places?
It's quite clearly US is our key number one market, and that's where we are developing. We have, over the last 10 years, we have put more than $14 billion into the US in terms of investments. We have got 40 manufacturing sites in 20 states. We're operating in all states with our services, etc. So that's a key market. We see the electrification market in the US as key, but also the industrial one, which has a lot to do with bringing home, let's say, manufacturing capabilities and capacity. And then the second one is clearly India, which at the moment is, in terms of growth, outstripping all other countries in a big way. They are very low in manufacturing capacity, and that's where a lot of investments now for the high-end manufacturing goes in. And then the third one will be Europe, quite clearly, as the European change in the energy system, but also the demographic issues which we have in Europe, which will take out, 50 million kind of working people over the next 10 years, and that needs to be replaced by automation and robotics. So there's a lot of investments ongoing there.
Peter, thank you so much for joining us. Really appreciate you coming here. Peter Bosser, he's the chairman of ABB. The ticker symbol to put into your Bloomberg terminal, ABBN, trades in Switzerland. Stock's up about 0.5% today. All-time high for the stock today. So that's why we get the audience for stock's at an all-time high. It's got a 93 billion Swiss franc market cap, so not too shabby. Peter Bosser from ABB joining us here. We're going to have more coming up. This is Bloomberg. Good morning.
today's headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the company stories we're following. Let's start north of the border. Canada's health department has awarded a drug establishment license to Optime Health. So what, you say? Well, this startup is going to export psychedelics for patient use. It's the latest milestone in a contest to supply the potential growth of medical psychedelic drugs. They're going to ship pills containing magic mushroom extracts, controlled and otherwise illegal. The milestone, puts Optime among a small group of legal international suppliers of psychedelic drugs. The company's chairman and co-founder is John James J.J. Wilson. He's actually the son of the billionaire Lululemon Athletica founder, Chip Wilson. Optime's bet is that even though the magic mushrooms are naturally occurring, demand for a pharmaceutical-grade version of the substance will be robust. And the company's going to have the credentials to scale and supply it around the world. For rocket companies founder Dan Gilbert, a $6 billion bet on Detroit's comeback is starting to pay off. General Motors agreed in mid-April to move its headquarters to a shiny glass and gold complex that the billionaire built in the heart of downtown. Less than 2 weeks later, more than 800,000 people packed the streets for the NFL draft, which Gilbert helped because of his relationship with the league's commissioner. In downtown, where not long ago few dared to walk around after dark, longer-term residents are arriving as well. Comeback story for Detroit. And Ford CEO Jim Farley says the company just 2 years away from offering technology that will allow drivers to take their eyes off the road and their hands off the wheel. That's a look at some of the company stories that we are following for you today. I'm John Tucker.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, kind of a mixed morning here trading-wise. We have the S&P down about 0.2%, the Dow off about 0.5%, but NASDAQ up just slightly, up about 0.1 to 1%. Yields, I think, is really action is we have got the 10-year Treasury down almost 9 basis points. We're at 4.4% on your 10-year Treasury. I'm going to call out Bitcoin because Tom is not here. It's up 1.5%. We're trading at just under $69,000 per token. And WTI crude oil, that's another big story, off 3.2%, now $74.50. How about that? With our news in New York City, here's Michael Barnes.
Paul, Jess, John, thank you very much. Now that Donald Trump's New York criminal trial has concluded, another highly political case begins. Hunter Biden arrived at the courthouse this morning for the start of his trial as jury selection begins. Bloomberg's Amy Morris has the latest.
President Biden's son, Hunter Biden, goes on trial today on charges of possessing a gun while on drugs. The trial in Delaware is only one of the cases facing Hunter Biden. His other trial in Los Angeles is on income tax evasion charges. That one is now slated for September, right in the middle of the presidential campaign. The younger Biden faces as many as 17 years in prison if convicted of all of the tax charges, but would likely face less time. 2 of the gun counts carry maximum prison time of 10 years. The third is punishable by up to 5 years. Amy Morris, Bloomberg Radio.
History is being made in Mexico. Claudia Sheinbaum is poised to become the country's first female president, and she's doing it in landslide fashion.
It's important to say that even in our lower results, expected by the preliminary results, we've got the majority of the Congress, deputies, and most probably in the Senate too.
Claudia Sheinbaum spoke through an interpreter as early results showed her winning by at least 30 percentage points. Wildfire evacuation orders near San Francisco have been lifted. A big fire in Tracy, California is now 50% contained this morning. Wildfire started near the Lawrence Livermore National Laboratory, about 50 miles east of San Francisco. Several homeowners in San Joaquin County were forced to evacuate, including this woman.
My husband came home and he was like, "You have 5 minutes, pack stuff for the kids," and he's like, "You need to get out of here."
The Corral fire began Saturday afternoon. Flames spread quickly, fueled by dry grass, high winds, and high temperatures. Global news 24 hours a day, and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Paul, Jess, John.
All right, Michael Barr, thank you so much. We appreciate it. All right, I want to talk about Paramount, CBS, Viacom, and who's going to buy them out. But I got overruled by Jess Menton. She says it's more important to talk about option pros are worried about an S&P 500 rally's staying power. talk to us about the story here.
Okay, so some context, because you and I were just talking about the size and scope of the S&P's rally from those October lows. So up 23 of the past 31 weeks, up around 28% coming in today. But if you look as the calendar is flipping, we're getting closer to the official start of summer in a couple more weeks here. But Elena,
to me, the official start, I'm sorry, just sure thing is Memorial Day weekend. Go ahead, but I know it's June
I agree. The Sweeney Compound,
right, yes.
Summer Fridays. Yes. Paul won't be here soon on those days, so get ready, guys. I'll be filling in for it. But nonetheless, Elena Popina, our team leader, and myself on our equities team, we're taking a look at what the options market is pricing over the next couple of months. So we are seeing a rising cost of protection right now. So the cost of hedging against a 10% drop in the SPY. So obviously the SPY tracking the broader S&P 500. It's at its highest since October. So that basically puts it at the highest of this year. And then to put into some more context, last year, obviously people kept getting burned so much trying to buy that protection while the S&P continued to rally. So people backed off of that, but you are starting to see a little bit of maybe some skepticism here. But again, S&P 500 trading still a stone's throw from all-time highs here, but you are seeing option traders starting to bet on a potential pullback over the next couple of months. But overall, if you're looking at particular macro events, on June 12th, it's also the Fed decision and CPI both on the same day. It's rare to have both of those fall on the same day. So Stu Kaiser over at Citi, he was looking at some of the straddles. So back last week, if you were looking at what they were pricing in for June 12th, it would have been the highest implied move for the S&P 500 since the December meeting for the Fed.
All right, well, your story was better than mine, so I'll have to...
I know you like to talk about Mickey Mouse, though.
The smartest...
She is.
In the room.
I was going to ask her to explain straddles, but we only have 7 seconds.
Straddles.
We'll do straddles in the next hour if we're lucky. This is Bloomberg Good Morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to talk global energy, and we do that with Ellen Wald. She's the president of Transversal Consulting, senior fellow at the Atlantic Council. Really, global energy is her forte. We'll talk about OPEC and the U.S. shale business. And then Max Abelson, Bloomberg News finance reporter, is going to come in. He's got a story on Mr. Steve Mnuchin. He's out there doing deals. And then we're going to talk BNEF, and Alex isn't here for this BNEF segment, which is New Energy Finance. We're going to talk about the sustainability research, carbon offsets, all that fun stuff that the folks in New Energy Finance track on a daily basis. But first, let's kick everything off with Mr. John Tucker.
All right, Justin Paul, let's start off with the data. Factory output coming close to stagnating in the month of May. Orders falling by the most in nearly 2 years. So that sent the ISM Manufacturing Index to a 3-month low. And this is fueling speculation the Fed could have room to cut interest rates this year. That is sending yields lower. The major stock averages, they are mixed right now. Let's start off with the more policy-reactive 2-year. That's down 5 basis points, 481 right now. The 10-year yield close to 9 basis points lower. That is at 440. S&P 500, 11 points lower. That's now 0.2% at 52.65. The Dow Jones Industrial Average, 207 points lower, down 0.5%. The NASDAQ 100 right now, 4 points lower. And Marvin Lowe at State Street says, you know what? While small risks do remain for investors out there, it should be clear sailing.
The waters are getting a little bit cloudier. We're getting much more mixed data. That certainly keeps, if you will, discussions of the Fed wanting or needing to hike off the table. That's important. We've taken out probably the biggest risk of the market with the Fed saying, you know what, we really don't think hikes are something that we're going to need to consider.
That's Marvin Lowe at State Street. And back to this apparent glitch at the New York Stock Exchange triggered volatility trading halts in about a dozen companies. So the NYSE confirming it's having issues. We all have issues, I suppose, but they're having a particular issue this morning. And we check the market's view all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Jess and Paul.
All right, John Tucker, thank you so much. We appreciate that. Jess Metton sitting in for Alex Steele here today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio and streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast. Jess, Bailey Lipschultz is in our studio right here. He covers all the equities.
Our favorite pal.
Is this going to be a problem for
Speaking
us
of straddle.
Yeah.
Thank you. Great segue. Someone who just got a couple different promotions, Bailey did. So senior reporter on our equities team, also the deputy czar for ECM. So Bailey does all things.
But a lot of our listeners know him as the meme stock
He's
guy.
the meme man. He's the meme man.
I'll let you.
Big Red's
you guys
back.
have
We
a
love this
conversation.
guy.
So what are we talking about here today?
Right. Walk us through the latest with the memes.
Meme stocks are back, right?
They were back last month too, and then they were 3 days later were gone. So we'll see how long this.
Bailey
blip
was
lasts.
off last week, and then he came in. We're throwing him back at it.
Monday was fun when I got a text message at about 10 p.m. yesterday saying "Giddy up" from Matt Turner.
Matt Turner, one of our
who's
team
not my
leaders.
boss, but who's one of the bosses. He has a 49% market share in my. Saying what I do. Basically, he said, get in the car, get in this morning at 6 o'clock. So I got in around 6:30 because of traffic. But basically, what happened yesterday evening is Keith Gill, who goes by the handle Deep Effing Value on Reddit, who helped jumpstart the meme rally of 2021, posted on Reddit for the first time in about 3 years a screenshot that showed a stake of 5 million shares in GameStop, average cost basis of $21.27 a piece, as well as 120,000 call options that would enable him to buy another 12 million shares. So according to the screenshot, we haven't been able to verify it. Keith Gill, aka Roaring Kitty, is the 5th largest holder of GameStop and could be potentially catapulted up to the 4th largest. And this really sparked another return to Reddit and X and other kind of social media platforms cheering on Roaring Kitty, who made a cameo back in May on X, basically, that helped jumpstart that rally. So we're taking another rebound kind of for the stock. It opened up 75%, now up closer to 30%, trading at $30 a share. But it seems like this meme mania, meme craze is living on again, driven by Keith Gill on various social media platforms.
Who is Keith Gill?
He's the guy who wore the headband, if you remember back from 2021.
But where did he get his money? Like, where did he, before this meme stock thing, was he anybody?
He was living in, I think, his parents' basement, day trading. He had a YouTube channel, so he was across YouTube, across what was then Twitter, across Reddit, and really just posting about how the heavily shorted GameStop was kind of ripe for a massive squeeze. Ended up being right in the moment, made millions of dollars, and was part of the many people featured in that Dumb Money movie. And now apparently, again, has $116 million bet on GameStop, and then had, according to the
So he's no longer in his parents' basement?
He's no longer in his parents' basement. The crazy thing to me is when you look at the screenshot, again, not verified, the stake was valued before today's rally at $116 million. Also had $29 million in cash in that trading account. So, like, in terms of numbers, astronomical growth seemingly for this guy who was well known because he wore a headband and talked on YouTube and posted memes and GIFs and referred to himself as a cat.
Well, in addition to what's going on with the target segue.
So where are the fundamentals in here of all this?
But wait a minute. I mean, there's 94 million shares of GameStop that have been traded today. I mean, this is real dollars and cents. And I'm going to go back to, I guess, your early reporting. I'm asking, like, who's trading this stuff? And you're thinking it's the algos and some hedge funds and kind of playing around with this stuff.
It still feels like that. When I look at the Fidelity Flow data on retail traders on their platform, buy to sell orders, modestly more buy orders than sells. So that does seem to imply, as you mentioned, when you have almost 100 million shares trading before 11:30 in the first 2 hours of trading, that there are other factors at play. And when you go back to the initial rally when he posted on X for the first time in 3 years, Monday, May 13th, 187 million shares. Tuesday, the day after, 207 million shares. So huge volume that week in that aftermath, despite really the argument being that a guy posted on X seemingly a bunch of videos that had nothing to do with the stock, and that whether it was shorts covering their investments, new shorts taking on bets, or people just trading call options, it sparked a flurry of activity. And again, as you mentioned, we're on track to well surpass the 200 million shares traded today, which is just seemingly a sign that people are trading this, whether or not it's the same people who used Robinhood 3 years ago.
So with this 116 million position in stock here, so the caveat is he would need to hold them till expiry or sell them in order to actually exercise those?
That would be for the 120,000 call options, yes. But he does, according to the screenshot, have a stake of 5 million shares. So you have the 5 million share position worth at the time of posting yesterday evening, $116 million. Separate of that is the 120,000 call options, which are still well in the money, could be exercised, would cost him, though, $240 million, but would also add to his holdings another 12 million shares. So if he can get some kind of a loan to exercise those options, now you're talking about someone who has a 17 million share stake in GameStop, which would again make him the 4th largest holder of the company, but still not have to actually report that because it's less than 10%.
Right.
Has anybody done a definitive piece on who this guy is?
Yes and no. I think people have written about it. A lot of it, he did talk to some media back in 2021. Then the congressional hearings happened and kind of went radio silent. As far as I know, he hasn't responded to myself or anyone at Bloomberg. I don't think anyone's been able to get a hold of him just because there was so much uncertainty about, did someone buy the X handle? Like, what actually is driving this? Could this be him? No one knows. But again, if we take this screenshot at face value, it's $210 million in someone's trading account.
All right, very good. I mean, Bailey Lipschultz, for better or worse, that's his report
That's
today.
right.
He's standing by
He's
at the
coming
meme
by.
stock discussion. We've gone down that
Our meme
rabbit
man.
hole yet again. Let's kind of dig out and go a little bit more fundamentals here. Let's talk about global energy, and we do that with Ellen Walden. She joins us from Transversal. Ellen, I'm seeing WTI crude oil off about 3.2% here today at $74.50. What's your thoughts here, Ellen, about the global energy market? What's kind of winning the day here? Supply, demand? What should we be focusing on?
I think right now we're seeing kind of a reaction to OPEC Plus's recent decision to start to maybe unwind the voluntary supply cuts in 2025. So we're not actually talking about a whole lot of oil. They're still keeping a lot of their supply cuts in place. But I don't think that the market really expected such long-term guidance from OPEC. And so it's they're reacting to that. And it's kind of interesting because gasoline prices in the U.S. are also trending downward, which is not something we'd usually expect, with this summer driving season starting. I think that there's kind of some tension here between what is could potentially be a slightly undersupplied market, or if, we keep seeing inflation running high, then we could even see the reverse. And I think the markets are just not quite sure at this point, what to expect this summer.
So it seems as if there's no room for more supply if the group, when we are talking about OPEC Plus, wants to defend those prices, let alone push them higher. Walk us through the dynamic here of what's set up over the next couple of months.
Yeah, so the group has basically decided to hold their current production levels steady through the rest of 2024, and then starting in 2025, the plan is that some countries are going, well, UAE in particular is going to start producing a little bit more because their baseline production is going to start to be inching up, and other countries like Saudi Arabia and Russia and other countries that have made extra voluntary cuts are going to slowly start to unwind those, mid 2025. So this is really just a very gradual process. And I think part of it is because they really didn't want to shock the market. They really don't want prices to fall. I think they're very happy, or at least Saudi Arabia is quite happy with prices in the 80s. That generally tends to be prices that Saudi Arabia sees as good, because the Saudis do not want prices to be too high. They're not like, oh, we want $120 a barrel a country, because they see that as basically asking for demand destruction, and they want to sell their oil. So, it is kind of a sweet spot that they're trying to maintain. I think that prices probably will recover unless there's some serious signs of, economic trouble, heading into, say, a full-blown recession or something like that. I do think otherwise we are seeing pretty strong demand, and I think prices will probably recover, Brent will recover to the 80s, at least the low 80s.
So, Ellen, is it unusual for OPEC to forecast kind of production levels, so far in advance? It seems like we've been almost on a month-to-month kind of scenario with OPEC and what are they going to do with their cuts. But now they're kind of giving us some visibility into next year.
Yeah, it's like a whole new world because we kind of got used to this idea of OPEC meets every month. Every month there's a new OPEC meeting. Who knows? Are they going to increase production, decrease it, keep it the same? And so every month they kind of had to put this together. And I think some people thought that this was a good thing because it meant OPEC was, on top of the market, ready to make adjustments for everything that was happening. But at the same time, there was no long-term sense, there's no sense of what they were looking for long-term. If OPEC really wants to be this kind of market manager, ensuring price stability, which is really kind of what they want, then they need to lay out some kind of long-term vision. And this is what we've got. Now, is the market going to go the way OPEC expects? Absolutely not. I think we can say for sure that's the only thing we know is that things are not going to play out exactly as they planned. But what we can know is that this is what OPEC wants to happen. This is their goal, and it may not play out exactly as they have foreseen and they have laid out now. They've gone through a pretty complex set of, and this month we're going to increase by this amount, and next month this amount. It's a very complex set of steps, but at the same time, the fact that traders and also consumers have a sense of where OPEC wants things to go, I think is very, very helpful for the long-term health of the market.
What do you think is the most likely outcome to unfold? Would it be that just an extension of all existing output targets would come to fruition?
Well, I think that's generally where they are. Things could change, though, on a dime. We could have a major hurricane that knocks out production in the Gulf of Mexico for a month or more, and then we could see OPEC act and say, "Hey, we're going to increase production by 2.2 million barrels a day starting, next week." So that's definitely the kind of thing that is not at all out of the question. And so you have to be prepared for this, and OPEC is certainly prepared to make adjustments as market conditions warrant. But the fact that we know that barring these kinds of things, that if things happen the way they do, the way OPEC foresees, then there's going to be a very kind of slow and gentle unwinding of cuts, and there will be more supply coming on the market, say by next year at this time.
Ellen, talk to us about the American producers. Where are our good friends in Texas and Oklahoma? What are they doing in terms of supply these days?
I think it's safe to say our good friends in Texas are not partying like it's 2015 or 2016. This is no longer the same market that we saw back then, where it was kind of the Wild West of production, tons of small companies. Everyone was just producing. The cash was flowing from the investors. The idea was just keep up production targets. It didn't even matter if you weren't breaking even. Just produce, drill those wells, get those barrels out there, meet payroll. Those days are gone. They are way in the rearview mirror. We've got, a lot of consolidations. We've got people making very smart decisions about where they're drilling and exactly how much oil they plan to get from wells. There's a lot of very precise imaging going on. A lot of these companies are considering exactly what's around them. Their acreage has expanded. They're making very educated decisions about what wells to bring on the market. They're also facing a lot of inflationary pressures. We often think that inflation is something that high oil prices cause on the rest of us. But these oil companies also feel the effects of inflation, and it costs a lot more to drill, to complete wells than it used to. And so, we have to take that into consideration when we're looking at what's going on. I think the wave of consolidations is probably good for the industry. It's definitely much better for kind of managing things, keeping prices more stable than we saw. But it's not always so great for jobs, because when more efficiency comes in, jobs tend to get eliminated.
All right, Ellen, thank you so much for joining us. As always, Ellen Wald, she's president of Transversal Consulting and senior fellow at the Atlantic Council, one of our go-to voices on global energy. And again, looking at Brent crude, that's down 3.2% here, $78.50 for Brent. So below that $80 level, that gets your attention here.
I want to actually point out a statement from the New York Stock Exchange on this technical issue that they just sent an email out. So a technical issue with industry-wide price bands published by the CTA SIP triggered halts in a number of stocks listed on the New York Stock Exchange Group exchanges. This morning, impacted stocks have been since reopened or in the process of reopening, and the price bands issues have been resolved. So it's a statement from the New York Stock Exchange right now.
All right, they're getting their house in order here. The Dow Jones Industrial's off 222 points. That's a 0.5%. The Nasdaq's off about 0.2%. I'm sorry, the Nasdaq's up about 0.2%. So we'll keep an eye on those markets as we do. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. The major stock averages right now, they are mixed. Some of the individual shares on the move. You have NVIDIA up 3.3% to bring its gain for this year to a whopping 128%. They unveiled new products and services over the weekend. And GameStop, those shares, they soared about 24%, move reminiscent of the rocket ride that shook Wall Street and brought the term meme stock into the parlance. GameStop jumping after a Reddit account associated with a central character in the 2021 episode said It had built a stake of 5 million shares, along with options to buy more. Some of the economic data, a report showing U.S. factory activity shrinking at a faster pace as output came close to stagnating. A measure of orders fell by the most in nearly 2 years, and pushing yields lower. The more policy-reactive 2-year, that is down about 6 basis points, 481. The 10-year yield right now, 9 basis points lower, and that is at 440. Once again, the S&P 500, 4 points lower, down about 0.1%, 52.72 on the index. The Dow Jones Industrial Average down 228 points. That's a decline of 0.6%. And right now, the NASDAQ 100 is higher, getting a boost from yields up 27 points. That's up about 0.2%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Jess and Paul.
All right, John Tucker, thank you so much. We appreciate it. Jess Menton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, as a longtime media analyst, when I hear Liberty in the context of business, I think of John Malone and Liberty Media and all the investments across media over the decades. Not so with our next story. Max Abelson joins us here with the big take story.
Star reporters here. We
exactly.
Love Max.
I know.
That's
We're
great.
in studio.
He's
Max Abelson, Bloomberg News finance reporter, joins us here in studio. Max, talk to us about Liberty Strategic Capital. Who and what is Liberty Strategic Capital?
It's so true. You hear Liberty in American capitalism, you think of John Malone. Stephen Mnuchin, former bigwig at Goldman Sachs, former Treasury Secretary under Donald Trump, former investor. He wants you to think otherwise. When I think that this is a story, I think at its heart, it's really about ambition. And what we write about in this story, although I should say me, this is my story, but I write about in this story, is that, what we saw 8 years ago, when Zach Miter and I wrote that Business Week profile of Mnuchin as Trump's money man, you were able to kind of get a snapshot of what it looks like when someone tries to take their Wall Street wealth and turn it into Washington power. And he did that. He was successful. People, I think, looked down their nose at it. They thought Trump's campaign was ridiculous when he agreed to do it. They were wrong. Mnuchin really saw something that other people missed. And Trump won. He became Treasury Secretary. You kind of forget this, but people went in and out those 4 years. Mnuchin stayed. He kept his head down. And what this story is about is capturing him as he takes that Washington power that he accumulated and he turns it into even more money. And it's a story about scale. I mean, this guy was an investor beforehand. Now he's a big investor. He's got this big war chest of Middle East money. He's going for deals that could be kind of like, I don't know, it's a little silly to say world historic, but if this guy can pull off a deal for TikTok, it's going to send him into this echelon of you're going to have to read the story to understand this, but not just gorillas, but the senior gorillas of global finance.
TikTok. Walk us through this about how that's associated with how when it comes to this war chest of wealth that he's been building.
Yep. So let me take you back in time. So I think you and I spoke back in March when New York Community Bank it was mayhem. There was news that leaked that New York Community Bank really needed capital, and that is not good. If you're a bank, you do not want news out saying, it'd be nice to raise some cash. Unbeknownst to us at the time when that headline hit, Mnuchin and some partners were basically a day away from investing in New York Community Bank. And they decided, should we still go forward? And they did. Of course, that actually, on paper, you know what? Their profits on that New York Community Bank deal, they have made a pretty penny, at least on paper, basically doubling their money. But a few days after that deal closed, he goes on TV and he says, you know what? I'm putting together a deal to buy TikTok. I've got a plan. And it was weird for a couple of reasons. One, because New York Community Bank made a lot of sense for Stephen Mnuchin because he bought, do you remember One West? Remember that bank deal he did? New York Community Bank makes sense in that light. TikTok, on the other hand, the guy invested in Hollywood. People forget about that. Mnuchin financed some serious blockbusters, including Avatar, if you saw it. But, it's like, why TikTok? And I think the way he sees it is, according to interviews with people who aren't working on that deal with him but know him well, it's like he's got an edge when it comes to national security matters. And don't forget, TikTok is now by law, the Chinese parent company is essentially going to have to sell it. So he thinks he's got an edge with national security and then also with deal making. On the other hand, his fund is like maybe $3 billion or so. It is going to take a lot more than that to buy TikTok here in the States. So we're going to be watching to see what kind of partners he can bring together and if he buys his first ever, social media empire.
All right, I see in your reporting, Max, Mr. Mnuchin made about 30 visits to the Middle Eastern nations while in office. That's around as many as his European and Asian visits combined. So he spent a lot of time there when in office. Is that translating into some investors in his fund?
I think that's really a key question. So out of fairness, I just want to cite his spokesperson, a guy by the name of Devin O'Malley, who liked to say to me while I was reporting the story that those 30 visits, according to him, are like different legs of just 9 trips to a region that he describes as highly strategically important. O'Malley would say that Mnuchin was advancing U.S. foreign policy, economic interests, not just going to collect money. But I think as a matter of historical record, you can see Mnuchin going to the United Arab Emirates. You can see him going to Qatar. You can see him going to Saudi Arabia. And, I'm talking about not just at his time when he was Treasury Secretary, but certainly in the months after that. And what does he end up with? He ends up with a fund, as I say, about $3 billion, and a lot of that money is coming from the Middle East. These are essentially the deepest pockets in the world, these sovereign wealth funds, essentially. And if you're an investor, that means that you get to play with some pretty fun money. He's gonna need some more money than that if he wants to do TikTok, but it means that it's turned him into essentially a private equity investor on a really big scale.
Where else does he have his eyes on next beyond TikTok?
Well, I had some fun reporting on the story. Not as much fun as that famous picture of him holding up the cash.
I feel like we all remember that
yes,
photo,
yes,
the
yes.
cash photo.
That photo was more fun. But I had fun looking at cybersecurity. He bought, he not only did Liberty take over an entire cybersecurity company, but it's a mobile security platform. It's called Imperium. I don't know if you've heard of that. But he has plowed money into Cybereason, Contrast Security, Blue Voyant. These are some interesting cybersecurity startups. And I want to tell you, not all of them have been a pretty picture. You've got Liberty bought 20 million shares of Satellogic for like $7.50 each. Back in 2022. You got to pull up your terminal and tell me what they're trading at right now, because it was below $1.20 the last time I checked. And then there's Cybereason. That was supposed to be worth like billions of dollars when he made his investment. The valuation now is said to be like $300 million. You do not want that order. You're supposed to invest when it's worth $300 million and then sell when it's worth billions. So Mnuchin is, it's been really fun sort of taking a snapshot of ambition, but I want to be clear with you, it's not a story of like these waltzing into becoming a multi-billionaire. It's going to be much more interesting and a little bit more up and down than that.
Is he in it just for the money, or does he want to be thought of in the same sense as a Julian Robertson, a George Soros?
Yes.
Some of those big legendary names.
Thank you for asking that. His old boss at Goldman Sachs, John Corzine, said to me, look, Max, money's nice. I get it. But it's more than that. I was actually kind of moved by something John Corzine said to me, because don't forget, Corzine, after running Goldman, I believe you're a New Jersey.
Sure,
one of you two live in New Jersey.
Yep.
They're both.
Right? Corzine managed to do the same thing. He went from finance into government, and while it lasted, he was successful. He was a senator, he was a governor. Corzine said that there's this feeling of being important and being at that table. That once you're at that table of global influence, it is really hard to leave it. Corzine said to me, this whole quote didn't make it into the story, but he said, some people are programmed that they leave that table of global importance and global influence, and they're able to go do something else. It's like, I like gardening on weekends, And some people want more influence and want more opportunity and want to be more engaged and can't disengage. And I think that's a pretty reasonable theory of helps explain Stephen Mnuchin.
All right, Max, and you can find Max's story here. It's a big take story, so you can find it on Bloomberg.com/big take. Or you can go on the Bloomberg terminal. I think it's NI space big take, and you'll get it there. And those are always our really well-researched, well-sourced stories on some really interesting topics. The big take story, Mnuchin chases Wall Street glory with overseas money. Max Abelson, the reporter on that one, finance reporter for Bloomberg News, joining us live here in our studio here in New York City. We appreciate that. Coming up, Kyle Harrison. He's head of sustainability research at Bloomberg NEF. That's our new energy finance group. They really have the best data and analysis on all things on the new energy, finance, solar, wind, all of that stuff. They are all over that. And he's going to join us and talk to us about the new carbon offset guidelines here in the U.S. Looking at these markets here, a little bit of a sell-off here, nothing crazy. The S&P is off about 0.1%, the Dow's off 0.6%, but the NASDAQ, go check it out. It's up 0.3%. Yields come in. I got the 10-year Treasury down about 9 basis points, 4.40 on that. WTI crude oil, we've been talking about it earlier, off 3.5% today. OPEC, a little bit weaker than expected commentary coming out of OPEC. So we've got WTI crude oil, $74.25. Bitcoin, it's up 2%, 69,200. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Jess, John, Hunter Biden's trial begins with jury selection this morning in Delaware. The president's son pleaded not guilty to lying about his drug use when he bought a gun 6 years ago. Tom Dupree is a former Department of Justice official.
This is going to be an exquisitively painful ordeal for Hunter Biden. He is going to sit in that courtroom and hear testimony from people who were among the closest people to him in his life, testifying against him in the most personal terms.
Former DOJ official Tom Dupree. Hunter Biden also faces federal tax charges in California, which he also pleaded not guilty to, but that case was pushed back until September. Claudia Sheinbaum is Mexico's first female leader in a landslide victory.
Desde aquí te decimos, presidente, gracias.
The former mayor of the nation's capital and candidate for the ruling Morena Party won yesterday's election by a margin of at least 30 percentage points. Sunday's annual New York City parade for Israel drew thousands of people along Fifth Avenue with heightened security and a focus on solidarity during the war in Gaza. The event in the past has been largely themed as a celebration of Israel, but organizers remembered Israeli hostages still being held in captivity, as well as outbursts of anti-Semitism worldwide. New York Governor Kathy Hochul.
We stand together today to support Israel, to support the hostage families, and of course, Jewish people all over America are united.
Governor Hochul. North Korea has flew over 1,000 balloons carrying trash and manure to the south. The military ended up having to spend a lot of time collecting it. North Korea offered a temporary halt late last night under the condition that South Korean civic groups stop sending anti-propaganda leaflets in balloons. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We had that weak manufacturing reading this morning, fueling speculation the Fed will have room to cut interest rates this year. Treasury yields lower as a result of that. And then among the 11 major industry groups in the S&P 500, the worst performing group right now, that belongs to energy, as oil is pressing lower right now. Oil producers tumbling. Brent was below $80 for the first time since February. Tech-heavy NASDAQ 100 outperforming. NVIDIA, Advanced Micro Devices, the heads of those companies showcasing new generations of the chips that power the global boom in AI development. They were doing that over the weekend. Meantime, Michael Cushman at Morgan Stanley says, you know what, the data showed the Fed can stay put on rates in the near term.
Job growth is decelerating, as it probably should. The economy can't keep generating hundreds of thousands of jobs every month and maintain a reasonable economic growth. And growth does seem to be decelerating. Quit rates are slowing. And unemployment growth seems to be decelerating to a more normal level, somewhere between 100 and 200,000 per month.
Yeah, right now the S&P 500, 9 points lower. That is down 0.2%. We're at 52.68 on the index. The Dow Jones Industrial Average is 277 points lower. The NASDAQ 100 right now up 29 points. That's a rise of 0.2%. And that glitch at the NYSE that triggered volatility trading halts shortly after the open. About 24 companies. NYSE says the industry-wide price bands, that glitch has been resolved. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Jess and Paul.
All right, John Tucker, thank you so much. We appreciate that. Jess Metton and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so check out us at youtube.com. Search Bloomberg Podcast, and that's where you'll find us. All right, Jess, here we go. On Tuesday, the U.S. government, led by the Treasury, the Department of Energy, and the Department of Agriculture, publicly endorsed voluntary carbon market. This won't lead to specific regulation, but the government outlined 7 key principles that U.S. buyers and sellers should follow to responsibly participate in this market. I don't know what that means, but I know
we're about to find out.
We're about to find out. He's the proud graduate of the University of Colorado, Buffalo, where I wrote many a tuition check. Kyle Harrison joins us here, head of sustainability research at Bloomberg BNEF. They have no idea how to brand themselves. That's Bloomberg New Energy Finance. He joins us here in our Bloomberg Interactive Broker Studio. Kyle, talk to us about this carbon market here. Where are we in kind of developing this market, and what's the key move here by the U.S. government?
So for several decades now, we've had what's called a voluntary carbon market. This is where companies can go and they can buy verified emission reduction certificates in order to achieve for example, carbon neutrality goal, where they're neutralizing their emissions. And so they'll go out and they'll buy these carbon credits. But the market has gotten a lot of criticism over the past couple of years for low integrity projects.
So when a Hollywood celeb flies on their private jet and they say, oh, but I offset it with my carbon footprint with blah, blah, what does that mean?
So they're going out and they're buying these carbon credits and they're investing in a project somewhere else in the world that is reducing or removing or avoiding carbon emissions. But the challenge has always been the integrity of those investments, right? It's been in projects that aren't necessarily leading to decarbonization. And so this market has gotten a lot of criticism, but there's been a lot of efforts from the private sector specifically over the past couple of years to boost that integrity. And now they have support from the U.S. government with this announcement last week.
So what happens next?
So, as you guys mentioned, it's a big ringing endorsement for this market. What the U.S. government did is it publicly supported a couple of initiatives, such as the Integrity Council on Voluntary Carbon Markets. This is a group of non-governmental organizations, as well as financial institutions and corporations that are working and creating their own standards for what a good quality carbon credit looks like. If you follow that Integrity Council principle or that framework, as a corporate buyer, I know I can buy those credits, and I'm not going to get accused of greenwashing. So I can fly those flights or I can continue to do business, but I can be relying on a tangible, impactful investment into decarbonization.
You know, folks, the work coming out of BNEF, I think, is absolutely the gold plate for this entire industry. And we rely upon these folks pretty heavily. I mean, here's just some crazy numbers. Every company in the world will need carbon credits to achieve net zero goals. And you guys at BNEF estimate annual carbon offset demand could reach 5.9 billion tons of carbon equivalent annually in 2050. That's up from 164 million today. What industries are going to be getting us there, for lack of a better word?
As you mentioned, it's really every single industry, but really you can look at the heaviest emitting sectors as the biggest potential demand sources. Oil and gas companies, metals and mining, industrials. These are heavy emitting sectors that can't easily decarbonize. You mentioned airlines before.
Yep.
As an airline, how do you reduce your emissions? Do you stop flying planes? That's the most tangible way to go ahead and do that, right? And so carbon credits will be an important part of their decarbonization strategy long term. And as you mentioned, demand could reach 6 billion tons. To give you a sense of scale, that's around 10% of global carbon dioxide emissions today. So this will play a huge role in the global climate change or the global fight against climate change in the future.
So then every company in the world would need carbon credits to achieve net zero goals. Is this how that works?
Exactly. And so you can use this analogy with any company, but carbon credits typically should only be used as for those emissions or that itch that a company can't scratch. Once it's done everything it can to reduce what it physically emits as a company, it'll have what we call residual emissions somewhere along its value chain. That is your perfect universe for carbon credits. And the US government was very vocal about this in their announcement last week, is that companies shouldn't abandon their decarbonization efforts. They should prioritize those efforts, and then they should use carbon credits, but those must be reliable carbon credits. And so that's kind of where these credits play a role towards the end of that value chain.
All right, I'll tell you why this gets my attention, because it's got the attention of Michael R. Bloomberg, the founder of Bloomberg LP and this little radio TV station thing we got going here. He's out with an editorial, a week or so ago, really kind of calling out the Biden administration, saying that this new plan might work, and it's something we need to pay attention to. I mean, is this something that's at the whim of whatever administration's in the White House at the moment?
Not necessarily. As I mentioned, right, the private sector is going to be the biggest leader in kind of moving this forward and spearheading it. It has been financial institutions and corporations that have taken the reins, and they will continue to do so. They will be the biggest demand source. But they need to be complemented by strong government support, right? And so this endorsement is hugely important, and it's obviously it's the Department of Treasury, but it's also the Department of Energy. The Department of Energy will be subsidizing and investing in early stage carbon removal projects through this initiative. And then the Department of Agriculture was also involved, and they're going to be going ahead and catalyzing and providing farmers with subsidies in order to pivot to low carbon farming. So it's really kind of a combined effort that's going to be needed both from the government and the private sector. But even with an administration change, for example, if you still have corporations and financials focused, it'll still move this market forward.
We only have about a minute left, but talk to us about tech companies like Microsoft and their plans when it comes to being more active in carbon offsetting today and how they really think of where it could continue going into 2050.
Technology companies have always prided themselves on their ability to lead and be icebreakers when it comes to decarbonization. So tech companies like Microsoft and Google and Amazon, they were the first large-scale corporations to buy clean energy from solar and wind projects, for example. It's only natural that they're kind of the icebreakers when it comes to voluntary carbon markets. You're seeing companies like Microsoft every day announce, or every week, huge carbon removal deals for these nascent technologies that maybe aren't necessarily at scale today, and they're also not competitive from a cost standpoint. What those investments will do is that they'll bring the cost down, and it'll make it more attractive and competitive for all those other companies that are out there to invest in carbon removal, and therefore this voluntary carbon market.
What did you major in at University of Colorado?
Environmental studies. Go Buffs.
Okay, my son did that as well. He graduated a few years ago, but I made him get a minor in business just for a rainy day. And now he's working for a huge financial services company, so thank goodness that happened, and we didn't have to go out.
So are we crediting Paul Sweeting for that?
Out of 4, I might have 1 following me in Wall Street, but University of Colorado, I'm a huge fan, wrote a lot of tuition checks there, great place, great folks out there. Kyle Harrison joins us here. He's head of sustainability research at Bloomberg BNEF.
I wanted to point out, though, because we only have about a little less than 30 seconds until the commercial break here, but New York Stock Exchange putting out another statement here. So all impacted stocks have reopened. All systems are currently operational after that trading glitch that we saw this morning, Paul.
Good to know. Thanks, Jess, for on that, because you are our markets reporter all over that and the team there. The Dow Jones is down 0.6%, 240 points. We're going to have more coming up. This is Bloomberg. Good morning.
company news headlines on Bloomberg Radio.
And I'm John Tucker. Look at some of the company stories we are following. This is an important one. Japan suspending the delivery and sales of 6 vehicles, including 3 manufactured by Toyota. This is escalating a safety scandal that's embroiled a handful of the world's top automakers. So the country's transport ministry says Toyota submitted faulty data during pedestrian safety tests for 3 current models, the Corolla Fielder, Corolla Axio, and Yaris Cross, and used modified test vehicles during collision safety tests for 4 past models, including the Crown. Toyota, among 5 car makers, including Honda and Mazda, found to have falsified or manipulated safety data while applying for certification. Toyota said shipment halts will affect 2 assembly lines responsible for the production of 130,000 units a year. And FanDuel, the sports betting giant, close to an agreement to put its brand on 18 regional paid TV networks owned by Diamond Sports Group. A multi-year deal between the companies would also involve FanDuel-related programming for the channels. That's according to people familiar. FanDuel, division of Flutter Entertainment, would resell Diamond's streaming service to fans and take an equity stake in the company. And we're number 2. We're number 2. According to the Journal, a new contender in the cola wars, and it's not actually a cola, it's Dr. Pepper, 139-year-old soda brand, now tied with Pepsi as the number 2 carbonated soft drink in America behind Coke.
What about Dr. Pepper?
That is number 2.
Yeah, there
Number
we go.
2.
So there we have. My mom's a big fan of